Hi, let's dive about TAL Education Group. It's a company that provides K-12 after-school tutoring services in China. The market cap is currently almost 4 billion. The price is dropping. It dropped last Friday over 70%, but there's huge political risks, but also there's a future check we see on the simple Wall Street 5 out of the 6, health 4 out of the 6. It's on the snowflake, shows the orange color, so it's not that bad, but there's a huge political risks, and the trading is happening currently 89% below the site's estimated fair valuation. Earnings are forecasted to grow over 50% per year, but the share price is highly volatile. They have high level of depth, and shareholders have been diluted in the past year. Latest share price and the events that they had. So basically, annual general meeting, earnings updates, private placement, and we see the latest drop in a 1 day, minus 70%. The 1 year return is currently minus 92%. So those who invested 1 year ago are almost losing all the capital that they invested, and it's going down very fast, and also they're reaching the numbers that they had 5 or 6 years ago. So if we check the 1 year ago, it shows, yes, somewhere around almost $80 per share. Currently it's $6. 5 year return, we see that they have been growing since the, I think, yeah, since the 2018 drop. Yeah, there was some of the crisis when at the end of 2018, and look at this drop. So basically since the mid-February, this is dropping 93%, and the same numbers were last time 2015, 601. Yeah, so there's this means the high volatility, so those who invested earlier could enjoy the almost 200% from the crisis, like after the crisis. Of course, those who invested long term could gain 4,000, 1,000%, but the volatility is huge, and but they have the fundamentals are very good. So the share price, we see here the fair valuation should be around 54, the same level that they have been basically a few months ago, and tip ranks showing the current analyzed price target at $36 per share. That means 500% upside. Actually, this is the biggest upside I ever seen, and in good scenarios 12-month forecast $68 per share. The Market Watch has even more. Stock price target in high scenarios, good scenarios, $100. That's huge. Average 58. Even in low scenarios, this is showing upside 7.6. But there's a huge risks considering that in that price. So I'm not sure if they could possibly being delisted. That could mean that it's minus 100, of course, but there's always that kind of risks present. Earnings and future growth forecasted annually over 50%, and earnings per share growth is forecasted as well as to grow. They are currently, I think that, yeah, they are currently unprofitable. They have this volatility on the earnings side, but the revenue is growing every year, every quarter, so this is pretty much very good for the company and shareholders. Past performance showing historical annual earning growth decreasing by 17%. So yeah, the earnings are volatile. They had this peak in 2019, 367 million earned. That is pretty good, 14.3 profit margin. And the financial health side, so there was the high level of depth. So yeah, they took pretty much depth, but they have cash to to cover the debt that they have. Debt to equity ratio is almost 50%, which is considered as high. And yeah, almost 6 billion of cash, equity 5 billion, depth 2.5 billion. Balance sheet looks mostly green, but there's depth that they have on the red. Dividend payment, they cut their dividends in the 2014 and they're currently not paying any dividends. The insider transactions, there's no transactions. Ownership breakdown, institutions holding 47%, insiders 31%, general public 20%, private companies 0.02%. Top shareholders, let's have a look. So there's a Morgan Stanley increasing, BlackRock, Vanguard increasing. Many of the institutions, companies are increasing, so there's a list of the companies whom are decreasing. So there's actually on the both side. Morgan Stanley decreased, investment banking and brokerage investment decreased, but investment management increased. But anyway, last reporting holding date 31st of March. So we never know, did they sell after that or what? But once again, this is highly volatile share price. The volumes back in Friday were pretty high, 261 million. And Simple Safe dividend shows that shares outstanding keep increasing every year. Total sales are increased as well, and sales growth, so this is actually very good. So they managed to increase the sales very fast. Last 12 month increasement 37%. But as I said, this is highly volatile share price, and so be careful. And investing.com summarizes the stock for long-term investors as a strong sell. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.